Kotak AMC, who shared their outlook on equities. In fact, my colleague Ajay Sharma caught up with the entire fund management team and shared with them their outlook for 2018, and they feel that this is going to be a year of consolidation going forward.
India was a house under renovation. 2014, 15, 16, 17, all these years we were putting our house in order. 2017 in particular, we saw after effects of demonetization and also rollout of GST. Now this is, going to have temporary side effect, slowdown in economy, but longer term benefits. 2017 was also the year where macro headwinds were in our favor. Oil prices were low, interest rates were soft, global liquidity was high. 2018 is the year where we will see benefits of demonetization and GST coming through, but the macro has deteriorated. Oil prices have moved from 40 and 60 to now 60 upwards. Interest rates have moved by 100 basis points. US Fed is threatening to withdraw liquidity. Our fiscal deficit will slip a little bit because of the slowdown in monthly GST collections. So we are at an interesting phase where we have built our house, we have put our house in order. There are certain headwinds which are coming against us, but since we have built our house in the last 2-3 years, that will help us mitigate or negate these headwinds, and yet we should be able to deliver good growth.
Right. Historically in the last cycle also we've seen Indian markets did rally along with the commodity rally. Do you think that we will buckle under pressure because of these macro headwinds, or do you think that the work done so far by both corporate India as well as the government in various areas of reform, we will hold through and at least build base and not buckle under pressure?
My optimism is that we will not buckle under. We have now $409 billion of reserves. We have companies which have cut cost. We have companies who have huge operating leverage. Bulk of India is operating at around 70-75% capacity utilization. We also have the lever of high real interest rates. There are very few countries in the world where nominal interest rates are as high as where our India's real interest rates are. We also have slight limitation of overvalued currency. So there are n number of tools available with the government and corporate India to manage the headwinds of higher oil prices, global liquidity which might ease off a little bit, but we have the tools to negate them.
Harsha, let's talk about specific sectors then. Autos has done very well and the numbers have also been coming in. What are your thoughts on autos? There are signs that CV cycle is now reversing. Do you see that happen?
See, the passenger car growth continues to be very, very strong. So the urban pocket continues to really deliver numbers in terms of discretionary demand. And what we believe is as we move forward, some of the hiccups that the rural economy saw last year will get normalized. We have already seen that in some of the sub-segments like tractors, part of two-wheelers as well. So I think there will be normalization of rural demand as well, which augurs well for passenger car, tractors, two-wheelers, all of these pockets. And as you rightly said, the CV cycle also seems to have kind of begun. And one needs to look at all these sub-segments separately and see where the valuations are on your side, because I don't think this is a segment where growth is going to be at risk. It's going to be valuations that you need to mind in terms of evaluating the company.